It's 8 a.m. in London, and somewhere in a glass boardroom, a sentence has just been said that would have sounded insane to most crypto investors 5 years ago. Ripple is slowly building the next JPMorgan. Not a meme, not a tweet, a serious line from serious people in traditional finance. My sources tell me somewhere between New York and London, a risk committee is finally approving something most XRP holders never thought they'd see. A green light to buy XRP through a Wall Street ETF, just looking at what Ripple is doing with payments, banking licenses, and digital asset infrastructure. And quietly asking whether this is no longer just a crypto company, but the early outline of a future mega bank with XRP at its core. So in this video, I want to unpack that idea in clear, simple English. What does it actually mean to compare Ripple to JPMorgan? How does XRP fit into that story? And what's the difference between marketing hype and the very real, very boring plumbing that underpins a global financial institution? For most of its life, Ripple has been framed in crypto as the XRP company. The people behind a controversial token, a long SEC case, and a lot of noise about banks that may or may not be using XRP. But if you step back and look at the last few years, the picture gets more interesting. Ripple has been buying regulated entities, applying for licenses, building payment corridors, and positioning itself inside the same rule books that govern banks and payment giants. That's not what you do. If your long-term goal is just to sell software and ride a bull market, that's what you do. If you're trying to sit at the same table as the big boys, the Visas, the JPMorgans, the global correspondents that quietly move value around the world every second of every day. Think about what JPMorgan actually is. It's not just a logo and a trading desk. It's a network of accounts, correspondent relationships, settlement systems, and regulatory approvals that allow it to move money between companies, countries, and currencies at scale. When someone says Ripple is building the next JPMorgan, they're not saying Ripple will clone that overnight. They're saying Ripple is trying to build a parallel rails system. But instead of being built on legacy tech, paper instructions, and batch files, it's built around tokenization, instant settlement, and digital assets like XRP. Over the last few years, Ripple has made a series of moves that fit that pattern. It has pushed into institutional custody, stablecoin infrastructure, and partnerships with payment firms and regional banks. It has talked openly about becoming a regulated financial institution in multiple jurisdictions, not just a vendor selling APIs to other people. Each new license, each new corridor, each new regulated product is another brick in a much bigger structure. On their own, they don't look dramatic. Put together, they look like a company trying to stand on the same map as the global banks, just using a different technology stack underneath. So where does XRP come into this? If you think of Ripple as building a kind of next-generation correspondent bank, then XRP is not just a speculative chip sitting on the side. It becomes part of the balance sheet logic, a neutral bridge asset that can be used to move value between currencies and platforms without needing pre-funded accounts everywhere. In the traditional model, banks park money all around the world, Nostro and Vostro accounts, to make sure payments don't get stuck. It's capital-intensive, slow and messy. In the model Ripple is aiming for, XRP can act as a highly liquid, globally traded asset that sits in the middle of those flows. You don't have to pre-park $100 million in 10 different countries if you can source liquidity on demand through a digital asset that settles in seconds. That doesn't mean every payment uses XRP or that every bank suddenly holds it on the balance sheet. But it does mean that, as the network grows, XRP can become a kind of internal rail for liquidity, especially in corridors where fiat rails are expensive, slow, or politically awkward. And if Ripple is serious about acting like a JPMorgan-level institution in this new world, it makes sense for them to hold significant XRP exposure themselves, not as a bag to dump on retail, but as the strategic fuel that makes their own system more efficient and, over time, more profitable. Another key part of the next JPMorgan idea is regulation. Global banks aren't powerful just because they move money. They're powerful because they're allowed to move money almost everywhere. That permission layer takes years to build. Licenses, capital requirements, compliance frameworks, relationships with central banks and regulators. If you watch Ripple's announcements, there's a clear pattern. More licenses, more jurisdictions, more alignment with existing regulatory frameworks. It's slow, it's boring. And it's exactly what you'd expect from a company that wants to move from being seen as just another crypto project to being treated as a systemically important piece of financial infrastructure. This is where the comparison with JP Morgan becomes useful, not because Ripple is there already, but because it forces you to ask bigger questions. Is Ripple content to be a middleware provider, plugging into other banks' systems and taking a fee? Or is it aiming to be a bank in its own right, one that sits directly between corporates, institutions, and markets? The more you see them acquire regulated entities, chase full-scope licenses, and talk about institutional-grade products, the more it looks like the second path, a digital-first, blockchain-native institution that plays by the same rules as the big incumbents, but with a radically different core technology. For XRP holders, this framing matters. It shifts the story from "Will XRP moon tomorrow?" to "What happens if XRP is tied to the growth of a bank-like entity that sits on the rails of global value transfer?" If Ripple succeeds in that ambition, XRP becomes less about hype cycles and more about throughput. How much volume is moving? How many corridors are live? How deep is liquidity? How many partners trust Ripple's infrastructure enough to run serious money through it? Price still matters, but in the same way that the share price of a bank or a payment company matters. As a reflection of the underlying business, not a random number on a casino wheel. Of course, there are real risks here. Traditional banks didn't build their position overnight, and they didn't build it without setbacks, crises, and regulatory pushback. Ripple is operating in an even more complex environment. Cross-border rules, changing crypto laws, legacy players who are not exactly thrilled about new entrants threatening their turf. Any one of those factors can slow progress, block certain lines of business, or force a strategy change. And because XRP is tied to this story, its price will feel that turbulence long before the corporate press releases catch up. There's also the question of competition. Ripple isn't the only player trying to build new rails. You've got banks experimenting with their own tokenized deposits, big tech dabbling in payments, stablecoin issuers chasing settlement use cases, and entire blockchain ecosystems pitching themselves as the future of finance. The idea that Ripple will become the next JP Morgan is probably too neat. The more realistic version is that Ripple becomes a major node in a much more fragmented multi-rail system, one important hub among many, rather than the single giant at the center. So what's the takeaway for an ordinary investor looking at this space? The first step is to stop thinking of Ripple and XRP purely in crypto bull market terms. If the next JP Morgan thesis has even a chance of being partially true, then we're talking about a very long game. Years of building, compliance, iteration, and negotiation. In that world, the key questions are: do you believe there will be a class of blockchain-native financial institutions that sit alongside the old banks? Do you believe Ripple has a realistic shot at being one of them? And do you believe XRP's design and role in the ecosystem give it a durable place inside that future? If the answer to those questions is no, then the comparison to JP Morgan is just noise. If the answer is yes, or at least maybe, then the conversation shifts. You're no longer just betting on a token going from one price to another. You're taking a position on the evolution of financial infrastructure and on Ripple's ability to execute on a very ambitious plan. So when you hear someone say, Ripple is building the next JP Morgan, don't take it as a slogan. Take it as an invitation to look under the hood, look at the licenses, the partnerships, the corridors, the acquisitions. Look at how often Ripple is now mentioned in the same breath as banks, payment firms, and regulatory frameworks, instead of just in crypto lawsuit threads, and then decide with a clear head whether that direction of travel is something you want exposure to, or something you're happy to watch from the outside. Because in the end, the question isn't whether Ripple becomes an exact copy of JP Morgan, it's whether, in a world of tokenized value and real-time settlement, there's room for a new kind of institution that plays a similar role using very different tools, and whether XRP, sitting quietly at the center of that system, ends up being one of the assets that benefits if that bet pays off.